Have you ever thought about diving into the world of stock trading but felt overwhelmed by the idea? Don't worry, you're not alone. Stock trading can seem like a complex maze, but with the right knowledge and a strategic approach, it becomes a path paved with potential financial rewards. Imagine being able to take control of your financial destiny, to build wealth or generate income from the comfort of your own home. That's the power of stock trading. But remember, every coin has two sides. While the benefits are enticing, stock trading also carries inherent risks. It's not a get-rich-quick scheme, but a journey that demands learning, discipline, and a well-thought-out strategy. It's about making informed decisions, not just rolling the dice. By the end of this video, you'll have a basic understanding of how to get started in stock trading. The first step in your trading journey should be to educate yourself. It is essential to understand the basics of stock trading. The stock market can seem like a complex machine, but at its heart, it's a marketplace where buyers and sellers negotiate prices and make trades. You need to grasp the different types of orders you can place. Market orders, limit orders, stop orders, each with their unique use cases. It's also crucial to recognize the factors that influence stock prices. Economic indicators, company earnings, news events, and market sentiment can all cause stock prices to move. Imagine being able to read the market's pulse, understanding its ebbs and flows. That's the power of knowledge. It provides you with the tools to potentially turn a profit in the stock market. Remember, knowledge is power in the world of stock trading. And once you've got the basics down, it's time to set clear goals and choose your trading style. This is an essential step in your journey to becoming a successful trader. Why is setting goals important? Well, just like any journey, you need to know where you're headed. Are you looking to generate quick short-term profits? Or are you more interested in building a nest egg for the future? Your financial goals will largely influence your trading strategy. For instance, if you're aiming for short-term profits, you might lean towards day trading or scalping strategies. But if you're more focused on long-term wealth, investing in blue-chip stocks or index funds might be more your speed. Remember, there's no right or wrong goal, and your goals can change over time. The important thing is to define them clearly and make sure they align with your financial situation and risk tolerance. Next, let's talk about choosing your trading style. There are several trading styles to choose from, and your choice should align with your goals, risk tolerance, and lifestyle. Are you someone who thrives on the thrill of daily market fluctuations? Then you might be a day trader, making multiple trades within a single trading day. Or perhaps you prefer a slower pace, holding onto stocks for a few days to a few weeks. That's the realm of swing trading. If you're more into the idea of buying and holding stocks for months or even years, you're looking at a long-term investing style. Each of these styles requires different strategies, time commitments, and levels of risk. So take the time to understand what each entails before deciding. Your goals and trading style are two sides of the same coin. They will guide your trading strategy, helping you decide what stocks to buy, when to buy them, and when to sell. So take some time to reflect on what you want to achieve and how you want to trade. Your goals and trading style will guide your trading strategy. With your goals set and your trading style chosen, you can now create a trading plan and select a reliable broker. A comprehensive trading plan is your strategic blueprint. It should outline your risk tolerance, your entry and exit points, and your strategy for position sizing. It's your guiding light, keeping you from making impulsive decisions when the market gets tough. Now let's talk about your vehicle in this journey, your broker. Choosing a reputable online brokerage platform is crucial. You'll want to compare fees, tools, and research resources. Make sure your chosen broker provides excellent customer support. This is key, especially when you're navigating through uncharted territories. Remember, every successful journey needs a clear roadmap and a reliable vehicle. Your trading plan is your roadmap, guiding you through the volatile and often unpredictable world of stock trading. Your broker, on the other hand, is your vehicle, providing the necessary tools and support to navigate the market. Your trading plan is your roadmap and your broker is your vehicle. Now that you have a plan and a broker, it's time to practice, manage your risk, and conduct thorough research. Before you dive into the ocean of stock trading, it's always a good idea to test the waters. Many online brokerage platforms offer what's known as paper trading. This allows you to simulate trades with virtual money, providing a risk-free environment to put your trading strategies to the test. It's a fantastic way to gain experience, learn from your mistakes, and build confidence without the fear of losing real capital. But even when you're ready to trade with real money, remember that every investment carries risk. The golden rule of trading is to never invest more than you can afford to lose. One of the best ways to manage this risk is by setting stop-loss orders. These automatically sell your stocks when they reach a certain price, helping to limit potential losses. It's imperative to stick to your trading plan and avoid making impulsive decisions based on market fluctuations or emotions. Now let's talk about research. In the world of stock trading, knowledge truly is power. No matter how enticing a stock might look, never jump in without doing your homework. This involves performing fundamental and technical analysis to evaluate a company's financial health, industry position, and market trends. Keep an eye on news and events that could impact stock prices. This could be anything from earnings reports to geopolitical events. Research isn't a one-time task, but an ongoing process. The stock market is dynamic, with prices changing every second. Staying updated with market trends and financial news can help you make informed trading decisions. So there you have it. The trifecta of successful trading: practice, risk management, and research. Each one is crucial in its own way, and they all work together to increase your chances of earning profits from stock trading. Practice makes perfect, but always remember to protect your capital and do your homework. Scene script. Trading isn't just about buying and selling stocks, it's also about diversification, continuous learning, and managing your emotions. Let's start with diversification. It's the strategy of spreading your investments across a variety of stocks and sectors. Why is it important? Well, imagine putting all your eggs in one basket. If that basket drops, you lose all your eggs. Now replace eggs with your hard-earned money and the basket with a single stock. The illustration becomes quite clear, doesn't it? Diversification helps you manage risk by ensuring that a decline in one sector or stock doesn't wipe out your entire portfolio. It's a safety net, and every trader needs one. Now on to continuous learning. The stock market is a dynamic beast, always shifting and changing. New trends emerge, old ones fade, and financial news can turn the tide in an instant. To stay ahead, you must be in the know. Read financial news, follow market trends, and never stop learning. Remember, knowledge is power. The more you understand the market and its intricacies, the better your chances of making successful trades. Lastly, let's talk about managing emotions. Trading can be a roller coaster of highs and lows. It's easy to get swept up in the excitement of a winning streak or the despair of a losing one. But letting emotions dictate your trading decisions is a surefire way to make impulsive and often costly mistakes. It's important to remain calm, stick to your trading plan, and make decisions based on logic and strategy, not feelings. In conclusion, successful trading requires more than just buying low and selling high. It's about diversifying your investments to manage risk, continually learning to stay ahead of market trends, and keeping your emotions in check to avoid impulsive decisions. Diversify, learn continuously, and don't let your emotions rule your trading decisions. We're almost at the end of our journey, but there are a few more things to keep in mind. First off, tracking your performance is essential. Keep a trading journal, record your trades, the reasons behind them, and their outcomes. This way you can learn from your successes and mistakes. Secondly, start with a small capital. It's a wise strategy to dip your toes in the water before diving in head first. This approach can help you gain experience and build confidence without risking too much. Thirdly, never underestimate the importance of understanding tax implications. Your stock trading activities are likely to have tax consequences that can impact your net earnings, so be sure to stay informed. Finally, if you're unsure or need personalized guidance, don't hesitate to seek professional advice. Financial advisors or investment clubs can provide valuable insights, especially when you're just starting out. Track your performance, start small, be aware of tax implications, and don't hesitate to seek professional advice. We've covered a lot today, but remember, this is just the beginning of your trading journey. We've delved into the essentials of stock trading, from understanding market dynamics to setting clear financial goals, and choosing a trading style that best suits your lifestyle and financial objectives. We've also underscored the importance of creating a comprehensive trading plan and selecting a reliable broker. We've highlighted the value of practice, risk management, and research. We've emphasized the need to diversify your portfolio, continuously learn and manage emotions. We've also discussed the importance of tracking performance, starting small, understanding tax implications, and seeking professional advice when needed. In the realm of stock trading, there's always more to learn, more strategies to explore, and more skills to hone. Remember, the key to successful trading lies in knowledge, strategy, patience, and discipline. Happy trading!